The government's plans to change superannuation tax concessions might not be known for a month, as MPs argue about restricting how much money people can put into super. A new analysis by financial strategists Marinis Financial Group estimates that more than $1.5 billion a year could be saved if they remove an obscene tax break for retired politicians and other public servants. Hundreds of thousands of public servants with defined benefit superannuation schemes, which were closed to new members by the mid-2000s, were granted a 10% tax offset on the retirement pension income a decade ago, even though members paid no tax on their super contributions of fund earnings during their working years. They're among the most generous schemes in Australia, and probably the world, and they don't need an extra free kick. Marinis Financial Group Managing Director Theo Marinis said, "The pensions they are getting have never, ever been taxed anywhere, but politicians want to start clobbering people who have been taxed the whole way." Defined benefit pensions typically pay a percentage of a person's previous salary for the rest of their life. Unlike most Australian super, which is a finite amount that drops as it gets spent in retirement, politicians and public servants in untaxed schemes receiving defined benefit pensions cannot double dip. They automatically receive their pension each fortnight, usually automatically indexed to CPI, with no exposure to market volatility, said Mr. Marinis, a former Treasury official. Australia's future fund, now worth $123 billion, was created to pay public servant superannuation pensions, but some say it is not large enough to cover their huge future cost. Finance commentator Robert Gottliebson has been campaigning against defined benefit scheme rorts, and last week renewed his call for a parliamentary inquiry. The cost of those defined benefit pensions is rising by $6 billion a year, and there is a $400 billion to $600 billion shortfall. That increase in costs is conveniently buried and not included in budget figures, but it's a real cost, he said. Public sector superannuation specialist Laurie Ebbett said some senior public servants were avoiding tax from beginning to end, and said the system should be changed. "I doubt that it would happen," he said. "They're not going to give it up easily." Mr. Marinis said politicians made little mention of these schemes because it affects them. He said the tax concessions could be stopped by a simple change to the Tax Act. You are not supposed to give tax concessions to somebody who hasn't already paid tax on their super. News.com. Our privacy policy includes important information about our collection, use and disclosure of your personal information, including to provide you with targeted content and advertising based on your online activities. It explains that if you do not provide us with information we have requested from you, we may not be able to provide you with the goods and services you require. It also explains how you can access or seek correction of your personal information, how you can complain about a breach of the Australian privacy principles, and how we will deal with a complaint of that nature.